SBI versus HDFC Bank, two of India's biggest banks. But which bank delivered better results in Q1 FY27? Let's compare their latest numbers. We will look at profit, growth, margins, and asset quality. First, the headline profit. SBI reported a standalone net profit of rupees 21,121 crore. That's a 10.2% increase year on year. HDFC Bank reported a standalone net profit of rupees 19,060 crore. Its profit increased 5% year on year. So, who had stronger profit growth? SBI clearly led on this metric. But profit is only one part of the story. What happened to their core interest income? Let's look at NII. NII means net interest income. It shows income from a bank's core lending business. SBI's NII rose nearly 15% year on year. It reached rupees 46,992 crore. HDFC Bank's NII increased 6.7%. It reached about 33,535 crore. So, again, SBI reported a stronger growth. But remember one important point. Their absolute numbers are not directly comparable. SBI has a much larger balance sheet and loan book. So, growth rates give us a better comparison. Now, what about loan growth? SBI's gross loan book grew 18.63% year on year. Its deposit growth was 9.73%. HDFC Bank's gross advances grew 15.4%. Its total deposits increased 14.7% year on year. So, what do these numbers tell us? SBI showed faster loan growth. HDFC Bank showed faster deposit growth, and deposit growth is also important for banks. Banks need deposits to support future credit growth. Now, let's talk about margins. This is where the comparison gets interesting. SBI's domestic net interest margin was around 3%. HDFC Bank reported a domestic NIM of about 3.26%. So, who had the higher margin? HDFC Bank had the higher NIM, but there is some important context. Interest rates can affect bank margins. Funding costs can also change margins. So, one quarter does not show the complete trend. Now comes another key factor, that's asset quality. For banks, bad loans are very important. So, how did SBI perform? SBI's gross NPA ratio improved to 1.47%. However, fresh slippages increased to 7,046 crore. What about HDFC Bank? Its gross NPA ratio stood at 1.17%. Its net NPA ratio was 0.41%. So, who had the lower gross NPA? HDFC had the lower ratio, but there is one more detail to note. HDFC Bank's gross NPA rose slightly sequentially. It moved from 1.15% to 1.17%. So, asset quality remains an important metric to track. Now, let's look at business size. SBI's total business crossed the 110 lakh crore mark. That's a massive banking business. HDFC Bank's gross advances stood at about 30.61 lakh crore. Its total deposits stood at about 31.71 lakh crore. So, SBI remains much larger in overall banking scale. Now, let's answer the main question. Which bank delivered better Q1 FY27 results? There is no single answer. It depends on which metric we look at. For profit growth, SBI leads. For NII growth, SBI leads again. For loan growth, SBI also leads. But HDFC Bank had a higher NIM. Its gross NPA ratio was also lower. HDFC Bank also delivered strong 14.7% deposit growth. So, both banks showed different strengths. SBI's quarter was driven by strong credit growth. Higher core interest income also supported SBI. HDFC Bank showed strong deposit growth. It also reported healthy capital and controlled asset quality. So, what matters going forward? For future results, these are the key numbers to track: loan growth, deposit growth, NIM, asset quality, and profitability. These numbers will show whether Q1 trends can continue. So, based purely on Q1 FY27 reported performance, SBI reported stronger growth across these metrics, but HDFC Bank remained strong on margins, deposits, and asset quality. And that's the key takeaway from this SBI versus HDFC Bank comparison. If you find this video useful, subscribe our channel for more simple explanations. We cover important stock market and business news in easy language. Thanks for watching.